Hello traders, welcome to Investoo.com's The Essential Guide to Supply and Demand Trading. In this lesson, we are going to learn what demand is. And to do so, we're going to go to the 4-hour chart on crude oil. But first of all, let me define demand for you guys. Demand is the measure of how much of a particular currency people want at any one time. This means that demand equals buyers. Demand for a currency has the opposite effect on the value of a currency than does supply. As the demand for a currency increases, the currency becomes more valuable. Conversely, as the demand for a currency decreases, the currency or the commodity becomes less valuable. Now, this is very logical. The more buyers we have, the higher price is going to be trading, the more valuable the commodity or the currency is going to be. It's as simple as that. Okay, and demand is what's most important in a bullish market. Why? Because on a bullish market we are going to be looking to buy dips, and when we are going to look to buy dips, where we are going to look to enter at these zones of demand. Okay, because this is the zones where big money or hedge funds and banks are going to be stepping in. How we are going to be looking for those zones? Well, that's easy. We are going to be looking for zones that price has tested in the past, and it also has to do with historical price action or historical levels. We are going to look for zones that price has tested in the past, and as you can see, we have one right here, okay, where we tested, and then we broke, and then we moved above. And you can see that we actually have I'm going to grab the trend line, one test and one move higher. Let's change the trend line color to a nice black, and we have a second test and another rally. All right, so this is what you can expect from demand zones, and of course this is a lesson for you to understand what demand is. All right, and I know that it's quite obscure, but this is the way you are going to find the levels where banks or big institutions are going to be stepping in. And remember that we as retail traders don't have the capacity or the liquidity to move the markets with our orders, so we need to piggyback the orders of the big banks and big institutions, and the big institutions are going to wait for price to hit those levels in order to get in. All right, now demand zone is equal to support. Remember that support, if you start drawing every support in your chart as we did on the supply lesson, then your chart is going to be looking a lot like this. And the reason your chart is going to be looking a lot like this is because you can't draw every support level. You need to focus on where the demand is, where the big money is going to be stepping in and purchase this commodity. Well, commodity in this case, because we are looking at crude oil. Now you can see that right here we have a new test and another area of demand, and finally we have the area that we are testing at this moment right now, where we found buyers one time, twice, and now a third time. All right, if this area breaks, it would mean that the demand on the if this area breaks, it would mean that the demand is not stronger than the supply, which would mean that price will be testing the next area, and we might have a rally from that zone, but we might also have a break below. And if we break below, then we are going to be looking to buy at this zone right here. And if price gets to the 40s, 270s, then we might get that rally that we are expecting. But everything has to do with buyers and sellers. If the 47.75 area breaks, this would mean that the buyers were less stronger than the sellers, or the demand was less stronger than the supply, and the demand zone now has become supply. And why it has become supply? Well, that's easy. You can see that we have a break and then a retest at supply, and that's what everything is all about. And on further lessons, And on the next lessons, we are going to teach you how to correctly draw these areas and how to correctly spot them.